Top of the morning to you, and welcome to Accounting 211. Today we're going to be discussing cash and internal controls. What we talk about in this chapter are things like what types of internal controls are necessary to keep a business's financial and actual custodial portions sound. Then we also think about cash and the particular controls that are necessary regarding cash. We talk about counting cash boxes and making sure that any differences between what we expect would be in the box and what's actually there is promptly recorded in a journal entry. We talk about petty cash and the fact that certain businesses, you might think of law firms, accounting firms, this kind of business that might accept no cash from customers, nonetheless might need a little cash to do certain emergency type things, and how should they account for it. And finally, we consider the monthly process of reconciling bank statements from the bank to general ledger accounts for cash. In the old days, we had to wait for a bank statement, and this could only be done after the end of a month. So if the bank statement was dated, let's say June 30th, then you'd have to wait for the statement to come in the mail. Once it came in the mail, you'd reconcile June 30th's general ledger cash to June 30th's bank statement. It might take a week for that to play out. Finally, when you have reconciled the difference, it may turn out that a journal entry is necessary, a journal entry backdated from the day you're reconciling, July 5th, July 10th, whenever that is, back to June 30th to make cash in the general ledger correct. In our modern era, bank statements can be printed daily from online banking systems. So still, accounting processes are somewhat rooted in tradition, and the tendency is to close books each month and therefore wait till the end of the month to print the bank statement. But certainly it could be done any day now. Take care, good luck, and let me know if you have questions as you look at the detailed slides that we have for the chapter.